What's up, Empire Builders? In this video, we are going to talk about the $40 billion accounting shortfall. That's right, the former whistleblower from Madoff, Bernie Madoff, is now going after GE, which we know that GE's been having problems, but this dropped this morning at about 6 a.m. pre-market. And I jumped on this and posted this to our premium community members that are Empire Intelligence Alert members. Which is just $240 a year, by the way. Pretty cheap. That's $19 a month, same as a gym membership. But instead of going to the gym and getting fit, you are getting fit in your wallet. Okay. So, anyways, I jumped on this and I said, look, this is big. This is going to be the first round of many news stories. This thing is short this to the ground. And it's dropped about 15%. Now it's pulled back a little bit, and I think we're at about 13% for the day. Easy 13% scalp, and I was late to the party. I'm sure that if I would have been paying attention and digging deeper, there would have been more indicators that I would have seen, if not weeks ago, at least days ago, with it. But I just wasn't. So let's go into this and then what I kind of expect to happen. Okay, so first off, he's calling this a bigger scam than Enron, or a bigger fraud than Enron. Okay, so Harry Markopolis, yeah, something like that. Wall Street Journal, ahead of the report's release, his group found GE's insurance unit will need to bolster its reserves by $18.5 billion in cash, and faulted the way the company is accounting for its oil and gas business. All told, he said the accounting problems amount to $38 billion, or 40% of the conglomerate's market value. He added that this fraud was bigger than Enron and WorldCom combined. GE shares were off 7% in pre-market trade thanks to this report, even though he's not saying anything that JPM's Tusa hadn't said already. Readers can download the report here. That's pretty interesting. I haven't read the full report yet, but yeah, this is not a good look for GE, and it doesn't really matter what's true. I wrote an email this morning, which if you're a reader, great, you already know what I'm talking about, but if not, it is free. It's just empirealerts.substack.com. I know I'm plugging a lot, but look, it's free. You just give an email address. You don't even have to give an email address, but at least then it'll come straight to your inbox, and you can get daily intel like this. I wrote a story about the fact that traditional markets aren't really moved by fundamentals and technical analysis as much as they're moved by news, especially lately, since at least December of 2018, when we had the government shutdown and everything else was going on with the government, and first big rate cuts and things like that were going on with Powell. So since then, it seems like it's been a fairly good indicator, even though the Trump indicator is not as good as it used to be. I think it was really great up until maybe 60 days ago, but now it's not so good. So anyways, we got that piece, and we got GE shares tank more than 13% after Madoff whistleblower calls it bigger fraud than Enron. So that report is 175 pages, probably take a good hour to read. General Electric shares fell as targets conglomerate new report calling it bigger fraud than Enron, blah, blah, blah. And he's making his rounds. But hey, good for him. My team has spent the last 7 months analyzing GE's accounting, and we believe the $38 billion in fraud we've come across is merely the tip of the iceberg. Oh my gosh. That's insane. Because it could be a lot more than that. It's going to make this company probably file for bankruptcy. Okay, so yeah, there you go. What did I post this morning? At 6:06 a.m., right as this news broke, I posted, same guy who researched Madoff found huge issue with GE. They are done. Short it to the ground. Look at that. Yeah, so it's dropped 74 cents. Oops, I thought I was showing my screen. I'm sorry. Okay, so here it is, 6:06 a.m. Shorted to the ground. Okay. Here's a fancy chart. 6:06 a.m. I made the post, and this is 1 hour 60 minute. So I grabbed this at like 9:15. So it was in this candle that I saw it happening, and which I was looking at smaller candle time frames. But then boom, boom, here we go. So 15% if you grab the whole move, or 10% if you're sitting on the move right now, which I would be still sitting on the move. That's entirely up to you. You could have just scalped it for 15%, but you got capital gains on that. But you could be sitting on it because I think it's going to go down much more. Floating around in 811, I think it can go down much further. Let me actually pull up the chart and we can look at this together really quick and then wrap this video up. There was another big zone. Where did I see that? Another big zone at like $6. That's what I was looking at. So let's go. Oh, I'm on 5 minute. Let's go on 4 hour. I like looking at higher time frames for stuff like this, especially Confluence. Okay, so just ignore. Oops. Yeah, shut off auto. Okay, and there it is. Okay, so I've got alerts set myself, but you know, we can see this bottom again, the $6.50 bottom. Well, dipping down into $6, and outside of that, I haven't really gone back that much further. But okay, so this was the December. This was right around the December dip. That makes sense. When the government shutdown was going on, and everyone dipped. The whole stock market dipped around this time. So we'll see worse than that. We'll definitely see worse than that with this, because this is okay. So why though? What's the difference between this and like what broke with WeWork? WeWork is about to do its IPO, so a little bit different, and that one might pass, but it just kind of proves that the IPO stuff, you know, it's just about done. It's just about done. The whole hustle that early investors are doing with that, but anyways, the reason why this will be different is because this is like robbing the American people. This is $40 billion. This is not going to end, and this is just the first phase. This is the first round of PR for this. There'll be another round, and it'll take another hit. So this is bouncing back today. Yes, it should. It totally makes sense that it will, and then it'll just kind of limber, okay, as no new buyers come in, and people are really just figuring out when should I panic sell, and then there's going to be another big news drop, and it's going to go down even lower. And then another news drop, and it's just going to keep happening. News drop after news drop after news drop until finally the last people finally capitulate and give in and are selling the crap out of this thing. And then yeah, that's when it finishes its descent all the way down to probably zero if they're going to go bankrupt. Okay, it just depends on what kind of bankruptcy they're going to go for, Chapter 7 or Chapter 13. Yeah, it hasn't seen $6 in a long time. When was this? This is 2009 bubble. So 2009 financial crisis, we saw 565. I mean, this is way bigger than that though. So we should see something similar. I'm assuming we'll at least see $6 in the next month of news cycles, because this thing isn't going to go away. It's not going to go away at all. Here's the original ascent from 1994. Wow. And I bet you if we zoom out, we are going to see a typical crash cycle, and we pretty much did this right here. Look at this section of the screen. This is your market cycle. Okay, boom, up, and then all the way down to this bottom here is essentially a crash cycle. And it, you know, it did consolidate at a much higher level than what I would even expect. But yeah, and then it fell down again. Yeah, there was 2009. Here was December. Okay. So 2009 and then December 2018. Those are the big ones that I use, by the way, because you can see them on almost every chart. Very simple to see. Okay, yeah, so it'll go down lower. It'll hit this low 6. That was 547 right there. Yeah. So anyways, that was my prediction anyways, is that we'll see at least $6 out of this thing before it's done with. I don't know how long it's going to take to drag on. I don't know how long they can sustain. I don't know how bad it's going to get. Okay, but needless to say, you would have made money if you were in the group. So that was really the point of this video, and to tell you that this is awful for GE, one of the oldest stocks, one of the oldest companies that's still in existence, an American company. You know, it's kind of like a staple of America, and this is what happens when you don't run your money and you don't manage your money correctly, which a lot of these companies do. A lot of these companies are awful at this, and you know, they rob the books for too long, and then you got a price to pay for that. So anyways, that's all I got for you in this video. Thumbs it up. Comment below if you got something to say. If you're here for the first time, hit the subscribe button, hit the bell notification. All the links you need will be underneath this video, including if you want to support us and buy one of our premium offerings, which we always love, and support you in the same way that you support us. So thank you very much for tuning in. See you guys.